Good evening, everyone. This is Mishra. We're going to start shortly. All right. So, welcome once again. So, today being Friday, the last trading day of the week, is the day for our webinar. Week ahead with Religare Technicals. Those who are joining us for the first time, uh, in this webinar, we talk about how the market performed during the week, especially the benchmark indices, sectoral performance, both positive or negative, top five gainers from the Nifty 50 basket, gainers and losers both, followed by our view on Nifty and the banking index, and some of the stocks which could perform well in the coming week. So let's get started with a quick disclaimer that the information that we're going to share during the webinar is for information purpose only. It's not a trading or investment recommendation. So before making any trading decision based on the information shared, please check with your financial advisor. Now, after 2 weeks of consolidation, the third week also largely remain in line, means it was a tone of consolidation, but we managed to end marginally higher on closing basis. Both Nifty and Sensex gained roughly around 0.5% amid this consolidation. Talking about sectoral front, the key sectors, both IT and banking, which holds considerable weight in the index, they were on the sidelines. In fact, there was noticeable profit taking in the IT majors post numbers. But at the same time, realty, auto, FMCG, energy, and media, these sectors helped to cap the damage and help the index to close in the green. So despite the underperformance of the top sectors, which holds weightage in the index, Nifty managed to end in green because of the other sectors which performed exceptionally well. Talking about top five gainers from the Nifty 50 basket, you'll have a couple of names from the auto space: Tata Motors, Maruti, in the range of 4 to 7%. Then we have Coal India, Tata Consumer, and Grasim from the other sectors, which also performed well. At the same time, three names from the IT pack: Infosys, LTIM, Tech Mahindra. Those were among the top losers in the Nifty 50 basket. And then SBI and Adani Ports also was part of that list. So it's kind of like a mixed week, but yes, comparatively better close. What we saw last week, and now what we are anticipating in the coming week is critical. So this is the daily graph of Nifty 50, which we discuss every week. So if you remember that last week we were discussing that it's important for Nifty to cross 20 EMA, then there's a possibility that we might inch toward 19,800, 850 levels and then 20,000 plus zone. So we finally crossed this, faded yellow line and inched higher, tested 19,800 plus zone, but we couldn't sustain. So what this indicates is that, despite the recent positivity, it's not outrightly bullish sentiments that we are seeing in the market. So it could be blamed to the negativity on the global front, which is cascading on the other markets, including us. Then we have the underperformance of the heavyweights, especially from the banking and IT, which is weighing on the sentiments. But broadly, if we are managing to hold around the key levels, that also seems like a strong close or strong start for the next up move or next directional move. But Short term, yes, indications are still in the favor that we might continue to see sideways move with bias slightly on the positive side, as long as we are holding above this 19,200, that is the lower band of this broadening formation. In between, stock specific, because the earning season has started now, and before the IT results, the IT stocks were in the flavor. In fact, in the last 6 months, we were seeing gradual recovery in the IT index. And from the last 2 months, we were outperforming the tech-heavy Nasdaq index, Nasdaq composite, that is the US market tech-heavy index for the last 2 months. But now, post numbers, we are seeing correction across the board. So we can't be rigid about our view, about our stock selection, about the sector selection. As of now, there's no particular sector which one can, say that, yeah, it's outrightly bullish. Yes, realty, pharma, metals, they are doing comparatively better. But in between also, we have phases wherein select stock, witnesses very sharp decline. And especially during earnings, it's become very common that one particular counter for some reason, sorry, witness sharp reaction, completely reverse to what we are seeing in the sector and the other stocks within the sector. So it's a very stock specific market. Short term, the view remains the same. Upside 19,850 is the first area of resistance for the Nifty. If we manage to cross, then this recovery may continue towards 20,000, 20,050 area. Downside 450, 250 will continue to act as a support zone. And that is what we are seeing from last 3 weeks. So keeping that in mind, since the tone is comparatively positive, despite the underperformance of the key indices, we feel that one can continue with the position more aligned towards the positive side in comparison to the short rates. Plus the broader indices, which we were, seeing sign of early sign of exhaustion, they are also still holding positively. So the focus should be more on stock selection now. But broadly, this range, 450 to 850, this is the immediate band. And then the broader band could be around 19,250 to 20,550 for the next week. The major culprit alongside with the IT majors is banking. So that we have discussed last week also that we are not seeing decisiveness during recovery in the banking pack. So after, testing this record high here, this area, we've been seeing gradual decline, and the recent attempt to reclaim 20 EMA, it has failed miserably. Means while the Nifty is already trading above 20 EMA, it managed to cross that mark. It also tried, but it couldn't sustain. And in fact, in today's session also, we have slipped below the 100 EMA on the daily chart. So this shows, the underperformance and the tone, because the top performing name within the private banking space, Axis, ICICI, they are witnessing excessive selling pressure on rise. So keeping that in mind, we feel that this underperformance might continue. And until we decisively reclaim 44,700, if you remember that last time we talked about this level, so that levels remain the same. Until we decisively cross and sustain above 44,700, I doubt that there will be any chance of outperformance or inline performance with the index. So the focus should be more on select names, names like Federal Bank, which is holding around the record high. So the top performing names, IndusInd Bank, which is holding strong. Recovery candidates is something that one should avoid as of now. So I hope this is clear when it comes to banking. Downside, this 43,800, this red trend line that you can see is basically, helping the index to hold the sideways tone. A break below this would, trigger the next leg of the down move. And 43,300, this red line is going to be the next crucial support. Obviously, this 43,100, which coincides with the 200 EMA, is going to be the area of support. So 43 800 is the make or break. So as of now, it looks comparatively weaker. This is something that one should keep in mind and avoid aggressive longs, in the banking space, at least for the short-term trading positions. So this is about two sectors now. What all stocks that one should keep on radar? The first on the list is Chambal Fertilizer. So as we were discussing that within the broader indices earlier, we were getting signals from mid cap index that it might top out. But as of now, it's again, trying to hold that short-term averages, which is a positive sign. Despite the 6 month of outperformance, 8 month of successive run. So, with the beginning of the earnings season, now stock selection become, more critical within this space, considering that some of these stocks, they have done exceptionally well. So Chambal is one such name from the fertilizer space where we have not seen any traction yet. And if you'll see this entire period, this a very narrow range consolidation, 240 to 260 on the downside and roughly around 290, 300 on the higher side, while holding above the long-term averages. So this gives us confidence that it's a kind of an accumulation. Plus, the recent surge in the volumes during the up days, during the upticks. When the stock is going up, we are seeing rise in volumes. When the stock is going down, the volumes are drying. So this gives us confidence that now it's set for the next leg of the up move. This consolidation should end. And once this is going to end, it's going to be a steady and a gradual recovery in the stock. So this is one such stock that one can accumulate in the phase like this, wherein we are seeing mixed trend in the product indices. This is the first name. Next, Havels. So Havels, anyways, we have discussed Havels multiple times during this webinars. For the obvious reason, because the strength, the texture of the pattern, everything is, gives us confidence that even if the market can, move southward, this stock is likely to hold the key areas. And that is what we are seeing from last several months. So after this, breakout from the triangle pattern, first it didn't fail. Then we had base formation above 20 EMA, followed by recovery towards the record high. And then again, from the last 4 or 5 weeks, we are seeing this pause or consolidation. So with decline in volume, this pause is basically offering you a buying opportunity. So it's not necessary to chase a stock which are trading at the record high, or they are witnessing breakout. Some of these stocks which are available on retracement, but the overall trend is positive. One can definitely look at those names also. So Havels is one such name which one can consider accumulating, with the short to medium term time perspective. Last on the list from the auto space, Tata Motors. Interestingly, it's being the top gainer also. It's just a coincidence though that it's a part of the list, because anyways we have selected the stock in the beginning of the day itself that we're going to talk about this. The reason is that we had this major consolidation in the stock for several months, followed by a breakout, and then again with hardly any decline in the price. Means it's more of like time-wise correction that we were seeing in the stock in the last couple of months. And this week the tone was positive from the beginning, and we have ended around the week's high. So this gives us confidence that yes, this positive tone which we are seeing in Tata Motors, there was hardly any correction during the corrective phase. So everything looks positive. Means be the price action plus the volume participation. So this is one such stock from the auto basket. Once we see a breakout, it's a steady performer. So obviously, this can be also on your radar for the next week. So just to sum it up, our view on indices first, both Nifty and Bank Nifty. So Nifty comparatively looks better in comparison to the banking index, but still, yes, we are not outrightly bullish. We are mildly bullish, considering the top sectors, IT and banking, they are underperforming. Broader indices, select sectors, they are offering buying opportunities. So one can trade accordingly. Selectively, yes, one can look at few shorts also as and when the market allows. On stock specific front, we've talked about three names: Jumble Fertilizer, Havels, and Tata Motors, which one can look for accumulation, uh, from short to medium term. So this is all from the presentation part. Now we'll have a quick poll. So please fill in your feedback, and then you can start posting your question using that Q&A tab. And I have a request that please avoid any stock specific queries. Anything related to any particular sector, definitely we can answer, but no stock specific queries, please. Please quickly fill this feedback, and then you can start posting your question using that Q&A tab. And for those who has join late, they can watch this webinar recording over our social channels, especially YouTube. And we post a summary of this in Hindi also over the weekend. So you can just check our social channel and take a look at in case if you missed some part of it. All right. So let's start with Q&A now. We have enough questions in queue. Okay, it's first question from Mr. AR on AMC stocks and cement stocks. So I understand that why we have query on AMC, though they were on the sidelines for quite some time. Though the move was gradual, but this week it was phenomenal. Certain some of these AMC names, especially in NAM India, which is Nippon AMC and SDFC AMC. So yes, after this move, I feel that one should not chase these counters, because we are not in the market like this. We are in markets are outrightly bullish, and even if you go wrong with the pricing, while entering this stock, market might not punish you or give you reward. In fact, so that might not be the scenario. So after this surge, I feel that there could be a breather in AMC stock, especially the two names that we've just discussed, SDFC AMC and Nippon. So one should avoid any fresh longs, and in case if you're holding position, it's okay that you can continue to hold. But fresh buying, one should wait and let these stocks stabilize, witness some consolidation, and then we can look at a fresh look whether we are seeing this move turning into a full-fledged rally or is just a recovery. Cement sector, again, we are seeing mixed trend. There's no particular trend that we are seeing in cement space. So for example, that we had very strong rally in Ramco Cement during the week. In fact, it's been doing exceptionally well. Then we have Dalmia, then we have Sri Cement, Ultratech, they are holding strong. But at the same time, the recovery in ACC, Ambuja, India Cement is fizzling out on every rise. So again, stick with the top names, especially in the sector like this, where we are seeing mixed trend from last several months. It's not weeks, it's last several months. So choose the top performing name in case if the sector is not performing clearly. So the stocks that we just named can be considered, provided that it offers you the comfort of entering fresh. Because some of the names, they have already seen very sharp rise. Thank you, Mr. Subramaniam, once again for participating and giving your feedback. Okay, Mr. Ling Vishwanathan have asked about FMCG sector. So yes, this sector is basically doing well. Some of the names which were underperforming earlier, stock like ITC, HUL, they are also participating in the move. Then we have Colgate, which is anyways doing well. So largely, this sector is participating. If you exclude a couple of names wherein we are not seeing any traction. So the view should be positive, and but yes, since we are into the earnings season, it's usually the sharp move that we see across the board. Even the defensives are not very defensive during the earnings season. So that is something what investor or trader should keep in mind. So I would recommend that if you are investing, then it's fine. But if you are trading, please maintain stop losses, especially during the earnings season, because the volatility remains very high. So among these names, as we were just discussing that Colgate, Britannia, now we have seen decent consolidation, HUL, ITC. There are some of the names which one can look at from the FMCG sector, and but yes, of course, with the strict stop losses. Mr. Raman Singh, a question on can we suggest on the manufacturing? So it's a very vast, sector means to comment upon. But yes, across the board, if you talk about capital goods, stocks related to telecom space, power, somehow we are seeing a decent, up move, or the tone is positive. But outrightly, buying at current level, I feel that it's not prudent, especially after such a strong run up in some of these names, the defense related stocks and stocks related to the power space, railways. So for a time being, let them consolidate, and we are into the earnings season, obviously. So the earnings should support the up move which we have already seen in these names. So if everything's connect well, then one can look at entering into the manufacturing sector for short-term plays also. But as of now, it's a long-term investment bet instead of for short-term trading strategies that one can look at. Okay, we have question on a PSU bank. So instead of answering on that, I'll rather answer on the PSU pack overall. So the PSU pack was in fact outperforming from in the recent decline, the recent underperformance. But in the last couple of weeks, we are seeing a bit of a pressure in the PSU's name also. So earlier we used to always talk about the top 3-4 names: SBI, Canara Bank, Bank of Baroda, Indian Bank, being the consistent player. Then the others we always recommend to avoid. But now we feel that with the underperformance in the banking, and the private banking are also in the back foot, they usually tend to witness sharp declines. Means PSUs are very high beta in nature. So both on positive and negative side, it surprises you equally. So with the starting of the earnings season, I would strongly recommend to please avoid aggressive longs in the PSU pack. In fact, look for buying opportunity in the private banking names on dips in case if they correct further. If the view is, let's say, for medium to long term. For short term also, I feel that they are comparatively better, private banks, because they are less volatile. And during the earnings season, one should look for these stocks which are less volatile. Because anyways, the volatility is very high due to earnings. So for a timing now, I feel that it's prudent that one should avoid long trades in the PSU bank until we see some reversal. Okay, next question we have from Mr. Sudhi Jain on private banks. So, Mr. Jain, I hope that I've answered your query on private banks while I was answering about PSUs. So, this is our view that privates are comparatively better despite the recent negativity which we are seeing in some of these private banking names, or the underperformance per se. It's an opportunity to accumulate these names, because eventually we expect the private banking names to lead the rally in banking index from here on. Okay, next we have question from Daulat Khan. Can we buy it stock in the current market or wait? So again, see, stock specific, one can continue with the long position. There's no doubt about that. In fact, the tone is market is also positive. So we are not saying that markets have turned bearish. So, but during earnings, if you are trading without stop losses, you are inviting trouble. It's otherwise also that when the earning season is not around, volatility remains high, but during earning it increases, it reaches to a different level altogether. So if you are trading with stop losses, there's no harm that taking position on the long side, even a market like this. All right, next question. This is important from Mr. Devendra Mahindru on IT pack. So what we are anticipating in IT after this recent dip. So IT has, like, we were discussing during the webinar that the last 6 months been very good for the IT pack. We were seeing consistent up move or recovery, despite the negativity on the global front. But now, after numbers, after the recent commentary from the management, we are again seeing reaction. But the tone has not turned negative for the IT pack yet. Technically, if I have to, see the picture, it's have not turned negative as such. So, which is definitely a positive sign. And if you remember that, if you go back and see our previous webinar, whenever we talk about IT names within the IT majors, we always talk about HCL Tech. Why HCL Tech is one of the counters which made a new record high, while others were struggling in the range. So we still feel that the top performing name from within the sector, which are participating on rotational basis or every on and off, those stocks are likely to continue to do well. So we feel that this scenario will continue. Same with the mid-cap IT names and for the IT majors as well. So, but yes, it's not outrightly a buying opportunity. So one needs to wait where this decline stops in the IT majors, and then one can look at fresh buying opportunity. If you're an investor, then definitely you can utilize this dip to add, because I'm honestly not seeing any major slide in the IT names after this recent profit taking phase. Okay, next we have question on stock related to rice manufacturing and packaging. So, see, agri-related theme, as we've just discussed about Chamal fertilizer and some of these stocks in the sugar space that we've discussed in the earlier webinars. Rice-related counters like KRBL, Dawat. Dawat is doing comparatively better. KRBL is not participating in line with the same. So I feel again one needs to be selective, and within these two, Dawat is outrightly a better candidate in case if the view is short term. All right. So next question from Mr. Rajiv Kumar. Any fresh view on metal sector, because commodity markets are down from last 12, 14 days. So yes, see, metal as a sector, metal, pharma, realty, these are some of the sectors which are anyways holding strong. And selectively, yes, one can definitely look at names like General Steel, JSW Steel, the top performing names. Then we have the second leg of names like Tata Steel, Hindalco, Hind Copper. So one can definitely look at these top names. Avoid the other names which are left out and witness excessive volatility. But yes, these are the names which one can continue to look at. Okay, so this question from Mr. Subramaniam, that which sectors are likely to be benefited if FTA is signed between India and UK. So that's not part of the purview. The second part of the question, that what about the power sector? So power sector, anyways, we have been seeing, within the energy space, this particular pack doing exceptionally well. OMCs, refineries, they are witnessing next trend, but power as a pack has done exceptionally well, both on the financing side and the distributors and the related players. But after such a strong performance, I feel that upside seems capped. So one need to be cautious for aggressive bets in the power space for a timing now. And in fact, one can look at booking profits, in some of these names. If you are like sitting on decent profits, there's no harm booking profit and let the earning unfold. If the earning also supports the price move, then you can look for re-entering. But for a timing now, I feel that's an opportunity to book profit first. Okay, so next question from Mr. Abhishek Maheshwari. I want to start a SIP on which sector I can do. So sector specific, SIP is something that I recommend not to consider uh, until you have a very strong, view on any particular sector, or you have a very, balanced portfolio already, and you want to take, higher risk for higher return. Because as like you mentioned that you're looking for higher returns, but it comes with higher risk. Because once we curtail ourselves to any particular sector, its performance basically dictates how the portfolio is going to perform. So let's say, for example, if somebody invested in banking index, uh, it's not be a very good performance. Same with IT index. So when you go wrong in one particular sector, this entire rally that we have seen in the market, uh, it feels cheated, to be honest, because your performance or your sector didn't participate in that move, and you are sitting on flat to negative, and the index is up 20%. So I feel that it's not an good approach to look for sectors based investing until you have a very clear thought process on any one particular sector, and you're very you are okay with taking very high risk. So Mohanan Krishnan, this is not the part of the purview of this webinar. So basically, he asked for what are the major advantages in case if somebody associate with Religare broking parallel to the other broking. So see, the major advantage that we have is the personalized touch that we provide, the kind of research, the kind of other support services that we offer. Honestly, it's not possible for me to comment on the others, how they do that. But for us, the clients, well-being and his, positioning and his portfolio, everything means the investment should be in sync with his view. So that is something that we try at Religare. And I would rather suggest you to send email to us on vcare@religare.com, and the concerned team would get in touch with you, and they'll update you about all the offerings, how we can help you, with your wealth management, with your portfolio management. Okay, next we have Nishant on defense sector. So Nishant, as we were just discussing about certain sectors which have outperformed the market by strong margins. Defense is one of such space, and now we are seeing bit of a breather of consolidation in all the top names, be it BEL, HAL, BDL. So now we feel that it's a time that one should book at least partial profit, because now the earnings season has started, and we'll see the reaction on how these stocks are going to announce their numbers. So it's prudent that in case if you're holding existing position, it's prudent that you should book profit and see how the earnings pans out. Because to maintain this kind of rise is very important to show the results on financial front also. See, for the long-term investment, if you're associated with us, Mr. Mona, then definitely you can get in touch with the our your respective relationship manager or your respective business partner with whom you are associated with. Otherwise, as I have recommended, that please send an email to us on vcare@religare.com, and the concerned team will get in touch with you. So we have question on currency. So currency is not the part of this webinar, so we are not in a position to comment on that. IT sector we have already discussed. FMCG we have already discussed, Mr. Athavare, as I understand that you were talking about FMCG space, so that we have already discussed. Defense we have shared. Energy sector, Mr. Deepak Kumar have asked about energy. So as we were just discussing about power names, they look slightly stretched. So it's time to book profit. We have mixed trend when it comes to the refiners. They are doing well. OMCs, they are struggling. So within the OMC basket, now we are seeing sign of recovery. So within these top three names, BPCL, HPCL, and IOC, IOC looks comparatively better. And apart from that, ONGC, All India, they are doing exceptionally well. So yes, selectively one can look at these names if the view is short term. All right. So next question from Mr. Raman Singh on realty sector. So realty sector, Mr. Raman, if you remember that last time, if you're there in the webinar, we've discussed about realty being the top performing sector for this week also. So that's in continuation to what we saw in the last week. So DLF, Godrej Property, Prestige, Overall Reality, Shobha, they all are doing exceptionally well, and we feel that after this recent up move, now there could be a bit of a leader in these names, but the overall trend looks positive for the realty space. So these names, the top performing names like Realty, Prestige, Oberoi, Godrej, one can definitely consider these names on depths. We have a question from Joshna Oberoi on I can invest in SIP of HDFC and Nippon. So these are the AMCs, Joshna. It's not any scheme. So these company offer mutual funds. So if you are new to the market, I would recommend you to get associated with somebody who can help you with the basic understanding of markets, how the mutual fund works, and what kind of mutual fund schemes that company offers. So you can write to us on vcare@religare.com, and we can help you with the basic details. Okay, Mr. Shiv Shankarji, as we have requested no stock-specific queries, please, if you're associated with us, you can send an email to us through the business partner or the branch. We'll surely answer about your stock-specific queries, but not in this webinar. All right, so with this, we have answered all the queries. Thank you, everyone, for all your feedbacks, your participation. And again, in case you have any query related to how we can assist you with your investment, you can share an email to us on vcare@religare.com, and we are happy to help you. So with this, we end this webinar. So next week, same time, yes, on 20th, we'll connect again. Thank you.